Hey guys, welcome back for your daily crypto forecast. Yes, even in Christmas, we are still covering crypto and checking out some charts. So Merry Christmas everybody, and let's just check out these charts. Today I'm going to be doing Bitcoin, BTC, Litecoin, Ripple, EOS, and Bitcoin Cash. I'm going to go very quick through all these charts. I'm going to focus only on the weekly candles because I think it's very important to focus on the weekly candles for the next few to several weeks. This is a very important signal. I have been talking about it already in a few previous videos, but I think it's the only relevant thing for right now, because the weekly candles are telling us a lot, are telling us about the short term, the medium term, and a little bit more longer term. So let's just focus on this. Is the only important signal I think is worth discussing right now. So I have here the Bitcoin, BTC, USD. These are the weekly candles, as I just said. And so we can see here very clearly this downtrend, the diagonal line that has been dictating the bear market for a year now. So this is a very strong trend line. You cannot fight against this trend line, so you should always assume continuation and rejection from this line until proven wrong. Also, this line coincides with the 20-week moving average, so by the time the price touches this line, it'll be at around the same level with the 20-month moving average. So this is going to be major resistance. The 20-week moving average is so important. Whether we are in bull markets or in bear markets, you can see the price will always go, when it gets extended from the 20-week moving average, it'll go snap back to it, bam, and bounce, boom, and bounce. Another touch, another touch, another touch, another touch. During the whole bull market and during the whole bear market last time here, well, here it went above it. It's an exception because, of course, nothing is always 100%. But after this one broke here, boom. Rejected again exactly at the 20-week, boom, another time at the 20-week, boom, another time at the 20-week, boom. Several weeks here couldn't break through it until it did break through it. So until this happens, we are not in a bull market, right? And even when this happens, it could be like in here, it broke, but it was still, it didn't last very long until it broke down again. So what I mean here is that the price will always go back to find the 20-week moving average. And as I have been saying, guys, the situation we are at right now is very extremely similar to this part of the 2014 bear market here. We had an impressive bounce here because we had a very heavy capitulation, so after a very heavy capitulation, things need to bounce. It's just a natural reaction of the markets. It's nothing special, it's not the bottom, it's not, it could be, but it doesn't have to be. It's just a normal bounce and normal reaction of the market. This bounce was 40% bounce, and then it retraced, it continued to go, it bounced again, but generally it went sideways with high volatility until it touched the 20-week moving average and the downtrend resistance line. Look how perfectly touched both at the same time. So I find these two similar with the current situation. I think that's what's going to happen. We're bouncing now, we're retracing, but we will eventually we will bounce back up again. And when we touch this diagonal resistance line and the 20-week moving average, we're going to get rejected and see the final capitulation here. Of course, anything can change anytime, so I will be updating. The one thing that would change my mind completely, it'd be if we actually can break above this diagonal resistance line. Until that doesn't happen, I'm going to continue to assume this line will reject the prices. Moving on to the Litecoin. So this is the Litecoin versus US dollar weekly candles as well. I have the same lines here that I had. I shared this on Twitter not that long ago, maybe 1 week ago, something like that. pointing out to this that it was bouncing here, but I was expecting this to touch the diagonal line and reject, and the final target, it could easily be $5 or $6 here. I know many people is not gonna like this, but it's a very real possibility. So again, I think we are right at these parts of the map when we had the first capitulation and then bounced up and down with very high volatility, but generally on the weekly candles going sideways until we reached this diagonal resistance line and got rejected and had another very heavy capitulation here. The reason I'm showing all these charts in the weekly candles is because it's important for you guys to draw this line on your own chart, so you don't have to be wondering what's going on, what's going to happen later. You know, I'm waiting for this update or this other update. Do that for any coin. They are all looking very, very similar. So just draw this line on your chart and monitor the price. And as soon as it touches this line and the 20-week moving average, expect rejection. Doesn't have to happen. Maybe it'll break in the upside with volume. And then I will probably start talking about, okay, we maybe could have seen the bottom here, but I doubt this is going to happen. So moving on to Ripple, XRP versus the US dollar. I reviewed this chart 1 or 2 weeks ago on YouTube. Yeah, pay attention to this triangle and especially to this descending resistance trend line here. And I was already talking about this line, and as you can see, it did touch the line perfectly and it rejected from the line. Now Ripple is closer from this line than other coins, so I guess we will find out sooner for Ripple if it'll be able to break out of this line or not. But what I said in my last update, and it still stands, I said to take profit on the way up on this bounce, exit your position if you bought the dip here, or if you've been in profits from this bounce. Close your position for a profit, and I would not re-enter long on Ripple again unless I see it's able to break out of this line. Moving on to the EOS versus the US dollar, weekly candles again. This one has been heavily requested by people on the comments and social media. So we are far away from this line for EOS because EOS had a very heavy capitulation similar to Bitcoin Cash. So, EOS and Bitcoin Cash are farther from this resistance line, which is a good thing actually, because it means they still have more room to continue to go up. So if you are into buying dips, go into smaller time frames, get your levels of support and resistance from previous highs. Specifically, get your levels of support from previous highs in the smaller time frames, in the 4 hours or in the 1 hour candles, and try to estimate where the dip is going to be. Of course, you wait for it to show a bounce. So, if it starts to bounce on your levels of support, you can buy that dip. Of course, use a stop loss because it's never guaranteed that the thing will bounce and continue to go up. But I would anticipate for EOS specifically that it'll, at some point, it'll find a bottom and it'll continue to go up until, like everything else, touches this downtrend resistance and the 20-week moving average. Moving on to the Bitcoin Cash versus the US dollar, weekly candles again, and just like I said for EOS, this one is very far away from the 20-week moving average and from this downtrend resistance line here, so that's a good thing. We still have more room to go up. For these ones, of course, it's not going to do it all straight in one single candle. It needs to have bounces and retracements. So again, if you are into buying dips, find your levels of support. This downtrend channel that I have here, I have been showing this channel for a long time now, or for the weekly candles for Bitcoin Cash. So it's important that you guys draw these lines, because this middle of the channel line, it's probably going to act as a support now for Bitcoin Cash at around $140 more or less. However, if this one breaks in the downside, then you need to get other levels of support going into smaller time frames. So if we go into the 4 hours, and this works for any coin, not just for Bitcoin Cash, you just go to the 4 hours and see previous significant resistance, it'll be significant support in the future. So what was the significant resistance here? It was at 146 more or less for this peak here. Of course, adapt this to your own exchange, because price is a little bit different from exchange to exchange. But we had a significant resistance here at 146, 147 more or less. So this is going to be major support. Now plus is at the same level with the 200 period moving average in this time frame, and it's also around the same level with this middle line of the channel. So this is triple support. It is expected that it will bounce here. However, if this one breaks, because I'm seeing a lot of red volume here, a lot of selling pressure, it could break in the downside. If it does, then you find your next obvious level of support, which is significant resistance from the past. In this case, we have a little one here, but it's not too significant. We have the most significant one down here at this, you know, at this resistance high from here. So let's draw a line. And this level is at $110 more or less. So, you know, as I said, if you're into buying dips to trade the short-term movements, you can buy this support. Use a stop loss, of course, for the short-term trading, and if this support breaks, then you leave it alone. You don't buy every little, you know, green candle. You just leave it alone until your next support level, which is at 110. But generally, you know, looking at the weekly candles, we're still going up, or at the very least going sideways until we touch the diagonal line and the 20-week moving average. This applies for every coin. So guys, I hope it's helpful. You can do this, you know, in your own chart for your own coin, and it's going to be the exact same technical analysis. Guys, I'll leave it here. Very Merry Christmas again, and yeah, thank you very much for watching, and I'll see you all tomorrow right here. Bye.